Welcome back to Market Moves, your daily dose of what's going on in the stock market today. I'm your host, and I have 5 quick moves for you. Let's get into it. The first move is about this company, which was founded by one of the wealthiest men in the world. His name is Zhong Shanjiang. He founded this company called Alibaba. But do you know his net worth? You might be surprised. As of today, he has a net worth of $69 billion. And before you ask, no, that's not how much he made from Alibaba. In fact, his fortune actually comes from a different source. Can you guess what his primary source of wealth is? Take a moment. It's not what you think. In 2017, Zhong took an unexpected step that completely changed his fortune. This is where it gets interesting. He decided to step down as the chairman of Alibaba and revealed his new venture, which was related to food. He invested heavily into this area, and just recently in March 2023, something incredible happened. His food empire went public. The company's shares skyrocketed by over 100% on their first day of trading. This means that the value of his food business is now worth around $135 billion. That's right. Just from food, he's making billions. So here's the deal. The majority of his $69 billion net worth doesn't come from Alibaba or technology. It comes from agriculture. He built a massive agricultural empire, and its success has been nothing short of spectacular. Now, the real question is, what does this mean for investors like us? Well, there are a couple of important lessons we can learn from Zhong. First, never underestimate the power of diversification. While he made his initial fortune with Alibaba, he didn't put all his eggs in that basket. He saw the potential in agriculture and made strategic moves to build a fortune there too. Secondly, consider investing in companies that operate in essential sectors. Agriculture is a fundamental sector that will always have demand. People need to eat regardless of economic conditions. Thirdly, don't be afraid to invest in businesses that might not be in the same industry as your initial success. Zhong didn't just stick to technology. He ventured into something completely different and look at the results. Lastly, always keep learning and adapting. Even if you're successful in one industry, things can change. Being willing to adapt and explore new opportunities is key to staying ahead of the curve. Remember, success is not just about what you know, but also who you know. Building a strong network of mentors and advisors can open doors to opportunities you might not have considered otherwise. By the way, if you're finding this kind of business insights valuable, let me know in the comments. A simple yes would mean a lot. All right, now let's talk about a stock that's making some big moves. It's Micron Technology, and it's a company that many investors have their eyes on right now. If you take a look at its stock performance, it's had quite the journey. In the past 6 months, the stock has seen a significant increase of 150%. That's a massive jump, and it's got everyone wondering what's behind this surge, and should you be a part of it? Now, I won't claim to have all the answers, but I can definitely share some insights that might help you make an informed decision. You see, Micron Technology is a leading player in the semiconductor industry, and they specialize in memory and storage solutions. These are essential components for a wide range of electronic devices, from smartphones and computers to cars and even household appliances. Think about it. Almost everything we use today relies on memory and storage chips. So when these chips are in high demand, Micron is likely to benefit. And guess what? We are currently in a period of high demand for these technologies. The growth in cloud computing, artificial intelligence, electric vehicles, and the Internet of Things is driving a need for more sophisticated and advanced chips. And this is where Micron shines. They are at the forefront of developing cutting-edge solutions that meet the evolving needs of these industries. However, it's not just about being early to the trend. Micron has also been making strategic moves to strengthen its position. They've been investing heavily in research and development, expanding their manufacturing capabilities and forging strong partnerships with key players in the industry. For example, they recently announced a major joint venture with a Chinese memory chip company. This move allows them to share resources, expertise, and costs, which could lead to greater innovation and efficiency. Plus, it opens up access to a larger market. China is a huge player in the tech industry, and this partnership gives Micron a significant edge there. Additionally, Micron has been benefiting from the increasing tensions between the U.S. and China. The U.S. restrictions on chip exports to China have put Micron in a unique position. Since Chinese companies are now prohibited from using American chip-making equipment to produce advanced chips, they're turning to domestic suppliers like Micron. This shift has created a significant opportunity for Micron to expand its customer base and secure a larger share of the market. Of course, no company is without its challenges. Micron has been facing some headwinds due to increased competition and fluctuations in the global economy, but despite these challenges, the company remains optimistic about its future prospects. They're focused on driving innovation, expanding their product portfolio, and maintaining a strong balance sheet. Only time will tell whether the stock continues to climb or if it's already reached its peak. But one thing is for sure, Micron Technology is a company to keep an eye on. If you're interested in investing in this company, please conduct your own research and consider seeking advice from a qualified financial advisor. Remember, every investment carries risks, and it's essential to make informed decisions based on your own financial situation and investment goals. By the way, if you're enjoying this video, give it a thumbs up and subscribe for more insightful market updates. Your support means a lot. Next up, we have Bank of America. It's a well-known financial institution with a rich history and a strong reputation. However, despite its solid background, the bank's stock has been experiencing some turbulence lately. In the past 3 months, the stock has seen a decline of nearly 18%, which might be concerning for investors and customers alike. But hold on a second. Just because the stock price is going down doesn't necessarily mean the bank is in trouble. It's important to dig deeper and understand the underlying reasons behind this dip. One of the primary reasons for the decline in Bank of America is stock price is the overall state of the banking industry. Recently, several regional banks in the United States have faced difficulties due to rising interest rates and a volatile economic environment. These challenges have led to a loss of confidence among investors and have resulted in a sell-off in the banking sector as a whole. Bank of America, being one of the largest banks in the country, hasn't been immune to these pressures. Another factor contributing to the stock's decline is the bank's exposure to commercial real estate loans. As work-from-home arrangements become more prevalent, there is a growing concern about the value of office spaces and other commercial properties. This uncertainty has led to a decrease in demand for commercial real estate loans, affecting banks like Bank of America that have a significant portion of their loan portfolio tied up in this sector. However, it's crucial to remember that while the stock price may have declined, Bank of America remains one of the most stable and well-capitalized banks in the United States. It has a strong balance sheet, a diversified business model, and a history of weathering economic storms. In fact, the bank's latest earnings report showed that it had exceeded analysts' expectations and that its core operations were performing well. Despite these positive indicators, the negative sentiment towards the banking sector and concerns about commercial real estate continue to weigh on the stock price. This presents an interesting opportunity for long-term investors who can stomach short-term volatility. Bank of America's fundamentals remain strong, and the decline in its stock price has created a potential buying opportunity for those with a long-term perspective. Nevertheless, it's essential to monitor the ongoing challenges in the banking industry and the broader economic conditions to assess the potential risks and make informed investment decisions. By the way, if you find this analysis helpful, let me know in the comments. Your feedback means a lot. Finally, let's talk about a stock that has been making some impressive moves in the market. It's Netflix, and it's a company that has managed to capture the attention of investors with its consistent growth and innovation. In the past 6 months, the stock has seen a remarkable increase of 112%, which is a testament to the company's ability to adapt and thrive in a rapidly evolving industry. What's behind this surge in stock price? Well, it's a combination of factors that make Netflix a compelling investment. One of the primary reasons is the company's strong financial performance. Netflix has been delivering impressive revenue and profit growth, driven by its subscription revenue and the expansion of its streaming services globally. Additionally, the company's commitment to investing in high-quality content has paid off. Its diverse catalog of movies, TV shows, and documentaries appeals to a broad audience, keeping viewers engaged and satisfied. Furthermore, Netflix has made significant strides in expanding its international presence. The company has localized its content and services to cater to different markets, allowing it to tap into new customer segments and drive revenue growth. Moreover, Netflix has recognized the importance of data and technology in enhancing its platform. The company uses advanced data analytics and recommendation algorithms to personalize the user experience, increase engagement, and optimize its content offerings. By leveraging technology, Netflix has been able to tailor its services to individual preferences, which has contributed to its success. However, it's not all smooth sailing for Netflix. The company faces intense competition in the streaming industry from players like Disney, Amazon, and Apple. Each of these companies has its own streaming services and is investing heavily in content to attract subscribers. Nevertheless, Netflix has managed to maintain its leading position by continuously innovating and staying ahead of the curve. It has introduced features such as offline viewing, multiple profiles, and mobile gaming to enhance the user experience and differentiate itself from competitors. Looking ahead, Netflix's future prospects remain bright. The streaming industry is expected to continue growing, driven by the increasing popularity of online entertainment and the shift away from traditional television. Netflix's strong financial performance, innovative content, and global expansion efforts position it well to capitalize on the opportunities in the market. That's it for today's market moves. If you found this video helpful, let me know in the comments. Your support means a lot. See you tomorrow.